Good morning, everybody. Happy Monday morning. It's December 29th, 2025. Three more trading days to the end of the year. My name is Bob Lang. It's time for our Daily Bites. Great to be with all of you today. Hope you had a nice holiday last Thursday, Christmas Day, of course, and had a nice long weekend. We did have one trading day on Friday. It was really a slow-moving day and expecting some more slow movement later on this week. It may pick up a little bit on Wednesday, but for the most part, not a lot of news, not a lot of speakers, not a lot of earnings coming out this week. So it's just all about repositioning positions that you have that you want to get rid of. Maybe people are wanting to sell items names that they have losses in, maybe book some profits as well too. It's been a good positive year for the markets. We're up over 20% in the Nasdaq, about 16-17% for the S&P 500, Russell, and the industrials off a little bit less than that, but still double-digit gains once again for the markets. It's a pretty incredible rise. Of course, paced by a lot of different groups this year. Obviously, right at the top is technology, and we also had strong numbers especially for the last 6 months in financials and banks and investment banks. Also good strength in metals, precious metals, silver and gold, obviously hit new all-time highs last week, and early part of November, they just took off to the upside and have not looked back. Silver, of course, down a little bit this morning. We're seeing it down about $4.50, almost 2%. But down to about 72. It was up near $80 an ounce overnight, and it's backing off a little bit. Gold down also more than 2%. Crude oil up about 2.5% already this morning. So we're seeing a lot of movement, a lot of repositioning here in front of the end of the year, which we should see a lot of that happen. But let's take a look at the health of the market. How healthy is the market right now? Well, first, we always start off talking about the breadth, right? Breadth is we look at it from two or three different ways. And one way we look at breadth is new highs, new lows, and on the New York Stock Exchange. And you can see here clearly very healthy breadth numbers here on the new highs and new lows list, right? And remember something, if a stock tags a new high during the session and then pulls back, it still counts as a new high. So we saw a large spike there in the early part of December, up there, much like we did back in September. So, but nice healthy readings as long as these new highs, new lows printed are above zero. And we also had a buy signal on this from back in middle of December when we got a couple of closes above 100. We're still above there. We're still healthily above zero, much like we were in the late summer, early fall period of 2025. Let's take a look at it from another view, which is the NASDAQ. NAHL is the symbol over there. Well, that's not quite as healthy as the New York Stock Exchange, the NYHL, right? So we did have some good positive new highs and new lows late November, early December, but that's faltered a bit over here. We're trying to get right back up there, but it's still not on a buy signal here. It's more neutral right now. We often do get strong breadth readings from the NASDAQ when it carries over from a strong day from the small caps, the Russell 2000. We just haven't had that lately. We do see the Russell 2000, of course, looking over here, down a little bit this morning. And take a look at the markets, of course, NASDAQ down about 120 on the futures, S&P futures down about 21, Dow Industrials only down about 60 points right now. We see volatility uprising. We did see a huge drop in volatility last week, which we often see in front of a holiday week and into the weekend. We closed Friday, at the lows of the year, 13.6. Let's take a look at that on a weekly chart just to put that into perspective. We hadn't been this low since December of 2024, and we had a good rise up in volatility right after that, and then of course into that Liberation Day moment in April where the VIX went up to 62, third highest level ever, second to COVID and to a financial crisis, third behind there. But we did have a big spike here, of course, in 2024, came right back down again. So, I think it's dangerous to be sitting here with volatility so low. And why is that? It's because the market is now feeling really rather complacent. The market doesn't feel like there's anything negative that's going to hit anytime soon, right? When VIX is down here at 13%, means that 30 days out, the market is not expecting any big news, anything that's going to rattle stocks. And we all know that is a false belief, right? We can't rely on the belief that that things are going to be great all the time. Certainly over the next 30 days, we're going to see some saber rattling, some rattling of the cages. I don't know what the catalyst is going to be, and really, I don't care. We just know there's going to be something in there that's going to make markets move up and down in a big way, right? So what I'm telling you is this: it's a great time right now to add some protection. And what kind of protection do you want to buy? I generally like to buy SPY and QQQ puts. How far do you want to go out? You got to go out at least 30 days, right? You got to take some protection out past 30 days. So we're talking towards the end of January. Kind of good timing because that's when the next Fed meeting is going to be, the first one of the new year in 2026. And there's going to be a lot of anticipation and speculation there. The Fed funds futures now are only projecting perhaps or predicting a 20% chance of a rate cut in January. So that's highly unlikely to happen. More likely going to see that next rate cut coming in April. March has about a little less than a 50% chance of it happening, much stronger chance in April. And then after that, of course, Chair Powell is going to be leaving the chairmanship, and we'll have a new Fed chief probably announced in the next couple of months. So looking forward to that. So what's the protocol for this week? Well, we have a short trading week, of course. Monday, Tuesday, Wednesday, the markets are open full trading days. Thursday, markets are closed, obviously, for New Year's Day, and then Friday, another full day. We are in the right in the middle of the Santa Claus rally period. Doesn't have to rally. It is highly likely that the markets will rally. Probabilities are strong. But as we know, the last 2 years were negative. We've never had 3 negative years. Look, the markets could go up, could be up 20 points on the S&P 500, and that won't seem like much, but it'll still be considered a win. We did have a strong day on the first day of the Santa Claus rally, which was Christmas Eve. And we had a weekday on Friday. We're starting off week here today, giving back quite a bit of ground. Now down 31 handles. So I think it's a good time right now this week. Sit tight. There's going to be plenty of opportunity, plenty of action for you. Bitcoin is struggling right now. I'm not really paying attention to that at this point in time. When it starts to rally, that's when we'll see if there's that correlation is right back with the markets. Strong again, volatility down again. This is a good time to add some protection. Buy some puts here. Raise some cash. Take some profits. Cut some losers, right? This is all part of the whole process and part of the whole protocol that we do regularly. But I think it's more important now as we head into the end of the year and into the new part of the year, because there's so much uncertainty going into 2026. The economy seems pretty strong. We're going to have earnings season coming up in starting in about 3 weeks. That's going to bring some interest and some excitement as well too. But for now, I think it's really a good idea just to step back a little bit and do very little. Keep your hands out of the cookie jar, so that way you'll be able to have some firepower and have some ammunition for the next round of whatever the market's going to give us. It's going to be up. Is it going to be down? If it's going to be down, we're going to be ready to buy some puts. If it's going to be up, we're ready to buy some calls and sell some puts. So that's where we're at right now. So I wish you guys all a great day, great trading day. We won't be back on Thursday, obviously, with the New Year's holiday. We'll be back next Monday on the 5th of January. to talk a little bit about what happened over the week and over the weekend. And I'm looking forward to spending a little bit of time with you guys. If you're in the chat room, I'll see you guys there all day today and the rest of the week. And if you're not in the chat room, it's time to get in. Make a New Year's resolution and come in and start learning about trading, learning about options, and making some money in 2026. I'll see you guys all later in the day, and also be putting some tweets out there. And don't forget, Rams Falcons tonight on Monday Night Football. Appreciate all you guys spending all the time with me today, and trade well. Bye.